My mental model of all of this is we're building a new economy. It's going to go from 3 trillion today to 100 trillion maybe within 10 years. And that is going to be the fastest growing economy of all time, obviously, the fastest accrual of wealth. But it acts like an economy too. It has GDP. There's all sorts of things. And it makes total sense when you say, well, they can look at this as a frontier economy that is highly investable.
Yeah, it is. And in particular, Bitcoin trades 40 billion a day or whatever. Like you could put an enormous amount of assets into it. So again, that's why I think it's a great space. Because if you zoom all the way back, when we were at Goldman, they did the GSCI, and now everybody thinks of commodities as an asset class, of course. And then in the 90s, we were doing EM together, and everybody thinks of EM as an asset class. I think it's the same thing here. In 10 years, everybody's going to think of blockchain as an asset class. They're all going to have an allocation. And with most people starting literally at zero allocation today, and, they put whatever 600 basis points, whatever the ultimate number is going to be in, it's going to drive value up. And the cool thing is it's already investable now. There's, a few firms in the space that do it, and a few, public companies, and so it's already an investable space.
According to Raoul Pal, CEO of Real Vision, Bitcoin is following the same pattern seen about 9 years ago before triggering a parabolic rise. He says market conditions are aligning in such a way that the king of cryptocurrencies can soar, just as it did 2 cycles ago. However, Paul notes that investors should expect an exact repeat of the 2016 rally, but rather a similar surge. In 2016, Bitcoin was trading at around $1,000 before skyrocketing to $20,000 a year later. Paul is also closely monitoring the global M2 measure, a broad measure of the money supply flowing into the global economy. According to Paul, global M2 is repeating the same pattern as the 2016-17, which could allow the king of cryptocurrencies to experience a massive surge. According to Raoul Pal, Solana Bitcoin is enough to build generational wealth by 2030. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
My view is that they do it more slowly using debasement. So that's the liquidity, the printing of money in lots of hidden ways. There's lots of ways throughout the system. And from my measurement, the global central banks and governments combined are increasing the global supply of money or debasing the currency by about 8% a year. So it's like, it's a tax you don't see. Most people don't understand it. The price of scarce assets keeps rising because you're lowering the denominator. You know this from emerging market days. Most people don't really understand this mechanism, but that's what happens. So, your wages don't go as far and the assets keep going up to make housing unaffordable, and 8% a year. But the flip side of that is without doing that, you end up with a huge crisis, which is even worse. So it's a rock and a hard place, right?
Yeah, and that really is the story for fixed quantity things like Bitcoin or other cryptos, is that if the governments around the world are currently debasing at 8% a year, they're probably going to have to speed up. Why be in something is being debased, right? Why not be in something that has at least kept up with inflation, like a bunch of those things you just mentioned, like gold and S&P? Or, hey, why not get into something? Our Bitcoin fund's 11 years old. It has a 90% compound annual growth rate, right? It almost doubles every year.
Paul predicts a seismic shift in the global economy and financial markets driven by accelerated technological change and a new political landscape. Paul laid out a transformative vision for the global economy, calling the next few years a transition to an economic singularity. He described this period as one in which accelerating technological innovation in AI, robotics, and blockchain has fundamentally transformed global markets and economic systems. He noted that technologists have taken over the White House, signaling a shift in government toward prioritizing innovation. Paul remained steadfast in his optimism about the cryptocurrency market, projecting a valuation explosion from $3 trillion to $100 trillion over the next decade. He highlighted that blockchain is the backbone of the digital age, enabling digital scarcity and efficient global transactions, which he sees as essential for future financial systems. Cryptocurrencies are the architecture of the digital age, highlighting the central role of blockchain in transforming how value is exchanged and stored. Paul highlighted a generational shift in market psychology, with retail investors normalizing speculation in response to unaffordable housing and limited opportunities for traditional wealth creation. Millennials and younger investors, he noted, are more comfortable with risk in speculative assets like cryptocurrencies. He advises investors to take advantage of current market conditions, saying it's a race to buy as much as possible, as soon as possible. While acknowledging the potential economic and social challenges, Paul remains optimistic about the opportunities these changes present. His suggestion is to focus on building financial stability before the anticipated economic upheaval transformed the world as we know it. The cryptocurrency market is in a state of flux, with low liquidity, declining capital inflows, and rising investor fear dominating the narrative. As trading activity has plummeted, the growing supply of stablecoins and the role of the global M2 money supply provide a complex but crucial context for future market developments. The cryptocurrency market has seen trading volumes fall to levels not seen since the 2024 U.S. election. According to data from Sentiment, trading volume across major sectors, including memes, AI tokens, and Layer 1 protocols, fell 56.7% from $134 billion in November 2024 to $58 billion in January 2025. This steep decline reflects a growing hesitancy among investors to invest in digital assets. Analysts describe this phenomenon as a trading paralysis, where participants wait in the wings for clearer market signals. Diverging trends in Bitcoin and Ethereum exchange flows add another layer to the story. Data from Glassnode reveals that Bitcoin has seen consistent outflows since December 2024, with an average of 80,000 Bitcoin withdrawn each month. This trend indicates strong holding behavior, but raises concerns about declining liquidity on exchanges. On the other hand, Ethereum showed mixed signals. While net outflows of 400,000 Ethereum were recorded in January 2025, significant accumulation phases occurred before then, with inflows peaking at 700,000 Ethereum in October 2024. These trends highlight different strategies between institutional and retail investors. The global M2 money supply, a measure of cash, money, and bank accounts, and retail money market funds, is a critical factor influencing Bitcoin and the broader cryptocurrency markets. Paul believes that AI's impact on the global economy could lead to significant market gains in the coming years. It's going to create societal disruption. It's going to create huge opportunities, but in ways we don't even know about yet, Paul said, emphasizing the profound impact of AI and other emerging technologies. He believes that these advancements will fundamentally change the way we work, live, and interact, requiring a major shift in our understanding of economics. When we get to the early 2030s and the world starts to change in ways we don't understand, we'll be safe because it will be much easier to do so safely. This philosophy underscores Paul's belief in leveraging the current economic environment to build a solid financial foundation for the future, especially given the uncertainties ahead. Paul remains optimistic about the U.S. economy, the stock market, and cryptocurrencies. He believes that Bitcoin is going to have a much stronger year than people expect, acknowledging the potential for short-term volatility, but emphasizing the potential for long-term growth driven by technological advancements. He also expressed optimism about gold, boosted by the continued depreciation of the currency.